Hi, it's David here, CEO and founder of the Freedom Founders Mastermind community. As we begin the new year, my desire for you is for you to reach all of your goals, all your aspirations, everything in life that you desire. That's what I want for everybody. I want it for myself. Now, life has a way of not giving us always what we want. We know that for a fact. Doesn't mean we can't aspire. Doesn't mean we shouldn't dream. We shouldn't have vision. We need to have all those things. We just have to also sometimes sit back and reduce our expectations for hitting certain ideals in life quickly. We become kind of an instant gratification society because everything is made easy by technology today. We can get things quickly. We have smartphones that have instantaneous connection and information on them. We can order food from this right here and have it delivered to us almost anywhere we are. We can get transportation. It's an amazing world today, and we've gotten used to just getting everything early on. In the same respect, we've also gotten used to, in many cases, in terms of our wealth building or investments, of having the same thing, of everything just happening quickly and being, for the most part, unless we just are being ignorant and naive and not being well-disciplined stewards of our money, of seeing everything kind of go up. The everything go up has been going on, well, with notwithstanding market cycles, but let's just go back to the last one, 2008, coming out of that last market cycle, which are regular repeaters over time. We've had nothing but a bull market up in everything coming out of 2008. And that's been further propelled by the Federal Reserve's monetary policies of keeping interest rates at virtually zero coming out of 2008 for all of the 15 years until the last 18 months, when for the first time in 40 years, inflation started to spike. Now, there's lots of reasons why that's happened. This is not the goal of this video to tell you why that's happened. It's there, and the Fed has having to acknowledge that they don't have a handle on inflation anymore. And so they've had to raise interest rates, and that's changed a lot of dynamics, but not to the extent that people expected. We've been thinking, and I certainly thought we'd have a recession by now, certainly before the end of 2023. I was wrong. But I feel like I know why. And this is where I want to help those of you who have not gone through full cycles, or maybe you've gone through full cycles, but maybe you were not a veteran business owner or investor at the time. You were a lot younger. If you're 40, 45 years or younger, you haven't seen what a full cycle really looks like. You've only seen what happens when there's an upcycle, and particularly a cycle that is out of the norm, a real outlier because of I'll just call it what it is, the irresponsibility of our politicians and the Federal Reserve, who are all trying to control a narrative by deliberately increasing debt loads. And you don't have to be an economist to understand that nobody, no person, no business can have a growth potential when it's all built on debt. It's not real. It's fake. If someone gave you an open line of credit and said, "Here, you don't have to pay anything back, or just pay back a little bit of principal as we go, but don't worry about the debt," you'd have a great life. But that's not reality. Yet in the U.S., we think we can do that because we've had the reserve currency going back 80 years to Bretton Woods in 1944. We've held the reserve currency. We're losing that as a country because of the irresponsibility, the outright arrogance of people that are running the show today. Without being political, it's both sides. It doesn't matter. I don't have to be political to talk about what's happening to our country. My main point to give you is that what we've realized, and again, whatever you've done and made your business work well, and you've had certain investments work well, that's awesome. It's great. Not taking that away from anybody, but most of that was made on the backs of monetary fiscal policy, fiscal being the spending that the government does, the deficit spending, which has now grown to $2 trillion a year, like close to $200 billion of deficit spending, where they're spending more than the revenues that come in. And how's that going to bode when we do hit the recession? Because we are going to hit a recession. Revenues will go down more, and yet the spending continues to go up. So we're amassing exponentially this cavernous debt that the government keeps acting like, well, we can just keep printing more money. There's a day when that's going to stop. Other nations are not going to hold the US dollar as a reserve currency forever. This is a dynamic that's gone on in history for years and years and years. Before the US dollar became the reserve currency, it was the British pound, the sterling. Held it for I don't know how many years. And they basically went bust. And then the dollar took over. But we have not been good stewards of that acknowledgement. of having the reserve currency, of using where we used to be a creditor nation. We're now the biggest debtor nation. Folks, my wake-up call to you is this. Reduce your expectations on the high flyers that we've all gotten used to, many of us. The models of business and investing expectations need to be changed to more of a Warren Buffett long game. A lot of people say, well, Warren Buffett, he's too old. He doesn't understand tech. He doesn't understand crypto. No. Warren Buffett understands more than you think he understands. Even as an older gentleman in his 90s, he's got the wisdom and studies this like nobody else. I'm not saying you have to invest like Warren Buffett. I don't invest where Warren Buffett invests. But what I do invest, like Warren Buffett, is long game, and I invest in tangible assets. Warren Buffett does not play the stock market. He does not trade. He does not do crypto. He is a long game investor in tangible assets. He's not buying paper. No, he's not index fund ETFs. No, he owns actual majority interests in certain companies. I just do it in real estate. That's what I do in real estate. I either own the actual real estate or I own shares with people I know, I can trust, that I've done the due diligence and curated that I want my money in, but I want to be in tangible assets. Paper assets are going to get killed, creamed in the next downturn correction. Tangible assets, if they're speculative and highly leveraged, will also get creamed. It happens over and over again. So before you jump back out in 2024 and thinking, hey, I missed the boat somewhere, I didn't jump on the train early enough, I need to get my money in this XYZ syndication or whatever, take a pause. It's hard to do. It's hard when everybody else is screaming and you have the FOMO because you're young. You don't know. Mark Twain made the quote very famously where he said, it ain't what you don't know that gets you into trouble. It's what you know for certain. So it just ain't so. And I think that's something to realize more and more today. None of us know everything. I certainly don't. But I've got years of experience and I keep myself well invested with other people that I've built the know, like, and trust from their experiences, because I can't study everything. I can't know everything. Neither can you. So you've got to first find a group of people or advisors, however you want to do it, formal, informal, join groups, mastermind groups, where your incentives are aligned. And the alignment of incentives is so important. Everybody today wants to sell you something. There's nothing wrong with it. That's a capitalistic society. If someone sells me something, service or product, and I feel like there's going to be good value, I'll exchange my hard-earned money for it all day long if I believe I'm going to get value back. But there's a lot of people that sell things that don't actually align with your interests. And I see it over and over again with syndicators in real estate particularly. But it's everywhere. It's everywhere. Not pointing a finger just at real estate. It's just I do a deep dive there and I see it all the time where syndicators are riding on your money. All the risk is on you, the investor or investors. And they're riding scot-free and making multiples off your money. And it's fine as long as everything works out. Nobody cares. I certainly don't care. If someone makes a lot of money and they also help me make good money and I don't have to be all involved in the nuts and bolts of it. But it's when the model changes, when the environment's changed, and the environment has changed greatly. A Warren Buffett quote is, you find out who's been swimming naked when the tide goes out. Well, the tide is going out very rapidly. And a lot of the deals that were good in yesteryear, where people made it look easy, are going to get torn apart. And I see people saying, well, I need to get my money in syndications this year, and where do I go look? And the advice is horrible out there about how to do this. It's horrible. But you don't know what you don't know. Back to Mark Twain, you don't know what you don't know, and that's the dangerous part. Understand what you're doing. There's a way to do that. You can study them on your own, like I did for decades, and get experience until I was able to get myself into higher level groups of people that were of caliber that I want to be with, that would stoke my thinking and cause me to be more curious and be more diligent with my underwriting and curation of both the people and the investments I'm putting my money into when I want to be more passive than I was active in my early years. But this is something you've got to be careful, because you can set yourself back greatly by playing what I call the casino game that the markets have kind of sucked a lot of people into, both in the financial markets and the tangible real estate markets. It's a game that is changing. The playbook is changing right now in front of our eyes. And if you don't understand that, slow it down and start learning what the models are going forward. It's going to be completely different than we've seen in the last 15 years. I can promise you that. Take good care. Best of the new year to you. Hope to see you down the road somewhere.